An accountant is a practitioner of accounting or accountancy, which is the measurement, disclosure or provision of assurance about financial information that helps managers, investors, tax authorities and others make decisions about allocating resource s. In many jurisdictions, professional accounting bodies maintain standards of practice and evaluations for professionals. Accountants who have demonstrated competency through their professional associations' certification exams are certified to use titles such as Chartered Accountant, Chartered Certified Accountant or Certified Public Accountant. Such professionals are granted certain responsibilities by statute, such as the ability to certify an organization's financial statements, and may be held liable for professional misconduct. Non-qualified accountants may be employed by a qualified accountant, or may work independently without statutory privileges and obligations. What is accountant? An accountant is a person who records business transaction on behalf of an organization, reports on company performance to management, and issues financial statements. A qualified person who is trained in bookkeeping and in preparation, auditing and analysis of accounts. Accountants prepare annual reports and financial statements for planning and decision-making, and advice on tax laws and investment opportunities. Here are several examples of the types of transactions in which an accountant may become involved. Issuing an invoice to a customer, which involves recording a sale and account receivable. Receiving an invoice from a supplier, which involves recording an expense or asset and an account payable. Issuing a salary or wage payment to an employee, which involves recording an expense and the outflow of cash. Reconciling a bank statement, which likely produces adjustments to the cash account. Also known as Incorporated Financial Accountant, Chartered Public Finance Accountant, Certified Public Practicing Accountant, Public Accountant, Certified Practicing Accountant, Certified Management Accountant, Chartered Professional Accountant, International Accountant, Chartered Management Accountant, Certified Public Accountant, Chartered Certified Accountant, Chartered Accountant. What do accountants do? Accountants take care of the daily financial transactions for a company or business. Their duties can cover various tasks that range from incoming earnings to outgoing payments. They may be in charge of figuring payrolls and tax deductions, paying vendors, implementing cash, check and electronic payments, preparing tax returns and reconciling the books at year-end. An accountant's duties may also vary depending on what type of accountant they are. Can you explain real account and nominal account with examples? Real account. Real account is an account of assets and liabilities. It is a general ledger account that does not close at the end of the accounting year. In other words, the balances in the real accounts are carried over to become the beginning balances of the next accounting period. Types of real account: land account, machinery account, building account, goodwill account, furniture account, patents and trademarks account. Nominal account. Nominal account is an account of incomes or expenses. Nominal accounts in accounting are the temporary accounts, such as the income statement accounts. In other words, nominal accounts are the accounts that report revenues, expenses, gains, and losses. Types of nominal account: salary account, wages account, commission paid, received account, telephone expenses account, printing and stationery account, interest paid, received account. What is the difference between real account and nominal accounts? The balance in a real account is not closed at the end of the accounting year. Instead, a real account begins each accounting year with its balance from the end of the previous year. Because the end of the year balance is carried forward to the next accounting year, a real account is also known as a permanent account. The real accounts are the balance sheet accounts such as the accounts for recording assets, liabilities, and the owner's, or stockholders', equity. However, the sole proprietor's drawing account, which is reported on the balance sheet during the year, is a temporary account because it is closed directly to the owner's capital account at the end of the year. The nominal accounts are almost always the income statement accounts, such as the accounts for recording revenues, expenses, gains, and losses. When the income statement accounts are closed at the end of the accounting year, perhaps through an income summary account, the net amount will ultimately end up in a balance sheet equity account, such as the proprietor's capital account or the corporation's retained earnings account. The balance in a nominal account is closed at the end of the accounting year. As a result, a nominal account begins each accounting year with a zero balance. Since the balance does not carry forward to the next accounting year, a nominal account is also referred to as a temporary account. Accounting coach. Can you explain personal accounts? Personal accounts are related to individuals, firms, companies, etc. A few examples of personal accounts include debtors, creditors, banks, outstanding, prepaid accounts, accounts of credit customers, accounts of goods suppliers, capital, drawings, etc. Natural personal accounts. It is the simplest to understand out of all and includes all God's creations who have the ability to deal, who, in most cases, are people. For example, Jack's AC, Alan's AC, etc. Artificial personal accounts which are created artificially by law, such as corporate bodies and institutions, are called artificial personal accounts. For example, private limited companies, LLPs, LLCs, clubs, schools, etc. Representative personal accounts, accounts which represent a certain person or a group directly or indirectly. For example, that wages are paid in advance to an employee. A wage prepaid account will be opened in the books of accounts. This wages prepaid account is a representative personal account indirectly linked to the person. Can you name different branches of accounting? There are 3 branches of accounting named as financial accounting, management accounting, and cost accounting. Can you explain bookkeeping? Bookkeeping involves the recording of financial transactions and other information related to the business on a day-to-day basis. The most important aspect of bookkeeping is to keep an accurate account of all records and keep them up to date. Accuracy is the most vital part of the bookkeeping process. Most common examples of records are receipts from customers, payments to suppliers, billing for products supplied, recording invoices from suppliers, recording depreciation and other adjustments, etc. Can you define as the bookkeeping equation? The bookkeeping equation for a sole proprietorship is assets equals liabilities plus owner's equity. The bookkeeping equation for a corporation is assets equals liabilities plus stockholders' equity. The bookkeeping equation is also referred to as the accounting equation. Can you define double-entry bookkeeping? Double-entry bookkeeping follows the principle according to which every debit has a corresponding credit, hence total of all debits is always equal to the total of all credits. In this system, one account is debited and at the same time another account is credited by the similar amount. Can you define accounting? Accounting is the systematic and comprehensive recording of financial transactions pertaining to a business, and it also refers to the process of summarizing, analyzing and reporting these transactions to oversight agencies and tax collection entities. Accounting is one of the key functions for almost any business. It may be handled by a bookkeeper and accountant at small firms or by sizable finance departments with dozens of employees at large companies. Can you define executive accounting? It is a type of accounting that is specifically designed for the business that offers services to users. Can you define public accounting? Public accounting offers audits and CPAs to review company financial records to ensure accountability. It is for general public. Can you define partitioning in accounting? It is a kind of groups made on the basis of same responses by a system. Can you define offset accounting? Offset accounting is one that decreases the net amount of another account to create a net balance. Can you define temporary account? A temporary account is a general ledger account that begins each accounting year with a zero balance. At the end of the accounting year, any balance in the account will be transferred to another account. This is referred to as closing the account. Can you define outside accountant? A company's outside accountant is an accountant who is not an employee of the company. An outside accountant could be a sole practitioner or a member of a firm that provides accounting services to many companies. Can you define deferred asset? A deferred asset represents costs that have occurred, but because of certain circumstances the costs can be reported as expenses at a later time. One of these circumstances is the assurance from an electric utilities regulators that the costs being deferred will be recoverable through increases in future utility rates. Can you define asset account? In accounting and bookkeeping, an asset account is a general ledger record for sorting and storing the debit and credit amounts from a company's transactions. The balance in an asset account will be part of the amounts reported on a company's balance sheet. Can you define master account? A master account has subsidiary accounts. A master account receivable could be anything. It could be account receivable for various individual receivable accounts. Can you define bank reconciliation? A bank reconciliation is a process done by a company to ensure that the company's records, check register, balance sheet, general ledger account, etc., are correct and that the bank's records are also correct. Can you define accrual accounting? Accrual accounting is a method for measuring the performance and position of the company by identifying economic events regardless of when cash transaction happened. In this method, revenue is compared with the expenditures, at the time in which the transaction happens rather than when the payment is made. Can you define post-closing trial balance? A post-closing trial balance is a trial balance which is prepared after all of the temporary accounts in the general ledger have been closed. The temporary accounts include 1. The income statement accounts consisting of revenue, expense, gain, and loss accounts, 2. The summary accounts, and 3. The few temporary balance sheet accounts such as the sole proprietor's drawing account or the corporation's dividend account. Can you define escrow payment? An escrow payment is an amount deposited with another party and it is to be released only for its specified purpose. The following is one example of an escrow payment. Can you define GAAP? GAAP, Generally Accepted Accounting Principle, is a framework of accounting standards, procedures and rules determined by the professional accounting industry and practiced by publicly traded U.S. companies all over the USA. Can you define owner's equity? Owner's equity, also known as capital of the business, is the claim of the owner of the business against the assets of the business. Owner's equity is calculated by subtracting equity of creditors from the total equity. Can you define trade bills? We know that all types of transactions need to be documented. The trade bills are the documents generated against each transaction. Subscribe to our channel, Interview Gig. Visit our website for more articles and interview questions and answers. www.interviewgig.com. Like, share and comment. Don't forget to click the subscribe button. Click the bell button for latest updates.